Hey everybody, welcome to the Dollar Vigilante, helping you to survive and prosper during and after the dollar collapse. I've got a returning guest coming on. It's Gus Demos of Perpetual Assets. I've known him for a number of years, and he's come to the last few Anarchapulcos and Dollar Vigilante summits. He spoke at the last TDV summit, I think the last two of them, and been a gold sponsor of them, and he's coming back again in February to do so. And it's quite interesting timing to have him on, because when I first talked to Gus, he mostly, Perpetual Assets did things like they have a gold and silver backed debit card, which is really great. I have one myself. They also did self-directed IRAs, but that's really turned into doing a lot of crypto-related IRAs. A lot of people want to get a lot of their cryptos into IRAs, probably a lot of them for tax reasons and things like that, especially with the gains of this year. And Gus is a real expert in that area. They do self-directed LLC IRAs and crypto IRAs, and we're going to get into all that and all the details about how to do that. So if you're out there and you've got some cryptos and you've got an IRA and you want to possibly get some of your cryptos into your IRA, then you definitely want to check this out. So Gus, it's great to see you.
Good to speak with you. Good to be back with you, man. And looking forward to Mexico again this year.
Yeah, it's going to be great. Just so people know, we already have more people registered for Anarchapulco and the TDV Summit than we had all of last year, and most people registered in the last 2 months. So we're going to have a massive amount of people. Actually, most things might sell out, so if you are planning on coming, definitely look into registering soon. But great to have you back as well, and we're going to have so many great speakers at the Dollar Vigilante Summit. It's going to be a lot of crypto-related things, as you can imagine, after this amazing year we've had, and I'm sure you've been doing well as well. So why don't you tell us a little bit about how your business has changed because of this?
Well, I started my speech just last year at the show with buy Bitcoin, and I was joking around. I kind of started walking away, and I just should have stopped at buy Bitcoin and said have a great weekend. But I talked about the war on wealth, and since then, I think at the time of Anarchapulco last year was what, 1,100 or something, 1,200.
Around 1,000 something.
Yeah, I mean it's been more than a 10-bagger, 15 bag, whatever, the last 11 months. So, but yeah, so when Nathan reached out this year, and Nathan does a great job. We've done a great job working with Nathan. He's the organizer that you guys have, and he's wonderful. And he's like, "Are you guys coming back this year for Anarchapulco?" I go, "Of course we are. This fourth year in a row or whatever." And he goes, "That's surprising, because a lot of the sponsors this year are just crypto specific." And what I told him right away, I'm like, by default, we've kind of become a crypto-specific company. We've always accepted Bitcoin, and we were one of the first guys out there to allow clients to invest with IRA funds in the crypto space. But where before this year, let's say, I don't know, 75% of our clients came to us because they were getting IRAs in the metal space. And in the last 12 months, I mean, since the chaos of the bull run started in the whole sector, that's probably flipped to 80-20, where clients come to us now specifically for just to use IRA funds to buy crypto. And we could talk about some differences between what other vendors out there offer and how IRAs work in specifics, but our plan isn't crypto specific. It allows you. Your IRA buys an LLC, and it's like a little asset management firm, a holding firm, and the client's running it. They're managing it. So they get to decide if they're investing in crypto or metal or shares of Apple stock or Singapore dollars or whatever, or all of the above. You don't have to specifically invest in just one asset class. You can invest in multiple asset classes. We don't tell you what to invest in. We just facilitate it so the client can invest in almost anything. So again, that's how the conversation arose with Nathan. The fact that like most people are coming to us now because of cryptos, and a lot of the initial conversation they have is, what separates you guys from other crypto IRAs out there. And so we've spent a lot of time the last 6 months. We've always offered this, but we've spent a lot of time the last 6 months trying to understand the industry that has arose the last year since the bull market has really hit, and all these new, I don't want to mention names or whatever, but all these new Bitcoin IRA or crypto IRAs are popping up all over the place. So that's where we're at now. We still offer metal. We'd still offer the same solution, but a large majority now are crypto focused clients that come to us.
Yeah, that's great. And I should let people know before there might be people watching from, for example, Canada who might be about to click off because they don't have an IRA and things like that. There's actually a company in Canada that I know called Guildhall that does cryptocurrency RSPs. So if you're interested in that, we'll have a link to that down below. It's dollarvigilante.com/goldrrsp. And of course, if you want, if you're American and you have an IRA or possibly 401k or things like that, and you want to get into crypto IRA and things like that, obviously just go to dollarvigilante.com/perpetual assets, and you can get in contact with Gus that way. So let's get into some of the details about how you would go about doing these sort of things. I'm sure for a lot of people, it sounds a little bit confusing. How would I get my Bitcoin or other cryptocurrencies? And maybe you can let us know, can you put other cryptocurrencies into IRAs and things like that? Give us all the details.
Of course, and it is complicated. But and again, that's why you're paying us or someone else. But so there are a lot of moving parts. But two things I definitely want to get to are fee structures, the way a lot of companies charge for the solutions and the trades that you make within the crypto space, and then something me and you and other people who have been in crypto for a while take very seriously. And that's who holds the private keys. At the end of the day, just like you know this as well as I do, that private key is the signature piece of ownership. So we take that very seriously, and that's one differentiator that we offer, and the fee structure is another. To give a brief synopsis, without putting anyone to sleep with financial jargon, but all retirement accounts in the U.S., not just our solution, but all retirement accounts, are held by either a financial institution or administrator or trustee or fiduciary, custodian. Linguistically, those words are interchangeable as it pertains to retirement accounts, including whatever someone has now. What we do is we transfer as much or as little capital. We don't care how much you bring over. We have clients that bring over $5,000. We have clients that bring over $5 million. It's totally irrelevant to us. We charge a flat fee. So we transfer it from its existing financial institution to a new financial institution. So from a capital flows perspective, point A is where your capital currently resides. Point B is the new financial institution. The new financial institution, under our solution, the LLC IRA, crypto IRA, whatever we call it, multiple things depending what the purpose is. The financial institution, point B in the process, only holds the capital for 3 to 5 business days while it clears. From there, it goes into a business checking account for the LLC that the client opened and control. So from a capital flows perspective, under our solution, current financial institution, new financial institution, business checking account for the LLC. Once the capital hits the LLC business checking account, we hand over the keys to the client, and that's when the client comes in and buys and sells and holds whatever assets they intend on buying and selling and holding. Doesn't matter if it's Bitcoin, Ethereum, Litecoin, holding liquidity, pesos, an ounce of gold, whatever, the client takes over. We get you compliant, we get you off the ground, we get you set up, and then you take over. Under a lot of the other crypto programs, what's happening is not the exact same capital flow. What's happening is point A still exists, and point B still exists. So your current financial institution is there, and the new financial institution is there, but the capital stays at point B. So under our program, your IRA is buying an LLC, and the LLC is an asset management firm, a holding firm, and then you come in it's like a little mini hedge funds, so to speak, which you're running, by the way, and have total control over. Under a lot of the other programs under there, it stays at the financial institution, point B, and point B is conducting the transactions for you. So they're the ones who are buying the Bitcoin or Ethereum or whatever, regardless of the security or asset class, they're the ones buying it directly. So that is what ties into the 2 points I brought up earlier. That's what ties into the fee structure of what a lot of these places are charging, and that's what ties into the private key ownership if we're talking about crypto specific stuff, which again many people take very seriously, myself included. So under their program, what we've uncovered a lot of the last 3 to 6 months is a lot of these places operate basically they're operating hedge funds themselves because they want to capitalize on what a remarkable bull run it's been the last year. So they'll charge 5% or 10% or 15% on the ups. They'll charge a management fee, and then they'll charge whatever, 500 bips, 1,000 bips on the upside, but then not incorporate any losses. So they could ride out the bull run, but they're not responsible. They don't have skin in the game if you get destroyed. A lot of the other places are just charging you for every single transaction. I spoke to a client yesterday, and she was like, they wanted to charge me 10% per buy. So they weren't charging on the sell, but every time she wanted to drop 50 grand or 150 grand transaction, they wanted to charge her 10, 15 grand rips on every single transaction. So I'll chalk that up. I'm not trying to tell anyone else how to run their business. Quite frankly, it's better for us that they're doing it this way. But I think it's because the bull market is so hot right now, and it's still, crypto IRAs are such a newer concept that they get away with it. And a lot of people don't know better. They'll just Google, whatever, and then they'll sign up. But a lot of these fees are out of control high. And we just charge a flat fee. We charge $19.95, $2,000 flat fee. It doesn't matter if you bring over 5,000 or $1 million. The guy who brought over 5 paid the same as the guy who brought over $1 million. And what you do after that is on you. The second part is the key ownership. You asked specifically, can you buy different types of cryptos? The answer is yes. But it's not the client buying them. It's the LLC buying them. So we hand over the keys to the client. The client would then jump on whatever exchange they chose. It doesn't whatever, Kraken, Gemini Coin, whatever. They would set up an LLC trading account on the exchange, and then they would conduct their crypto transaction. It could be a combination of multiple cryptos. And then what I always hammer to clients, if they have done diligence and been around this sector as long as me and you have, then they could also take the private keys offline. So if they want to go Trezor, if they want to go paper, if they want to go whatever, they can. They just can't commingle. You can't commingle IRA funds with personal funds. So if you have a paper wallet or Trezor wallet or whatever, you have to get a completely separate wallet for any retirement coins that you have. Which again, it's not a big deal. Just you can't commingle them. But the two key differences are ownership of the private keys and fee structures. And clients should be cognizant of both. And many that are new to the sector aren't. They don't understand. People who I got involved in, I walked through this 18 months or 2 years ago. Still, a lot of them still have their coins on Coinbase, and that's okay. But like, I personally don't, and I don't know if you do, but to some that's more important than others. So those are the two of the things we like to point out right away. But the industry is absolutely, on fire, as you could imagine, based on the market cap, the bull run, everything. And our business has really shifted to be more crypto specific.
Yeah, as much as people are really interested in cryptos right now because of the profit potential, and there's obviously a lot of greed going around, a lot of people, a lot of FOMO, a lot of fear of missing out, and people buying in. And, we're going to see ups and downs in these markets. Absolutely. There's going to be tons of bull runs and tons of crashes all along the way. It happens all the time. But one of the things that's really interesting to me is self-directed IRAs. And I got into this. I'm not even American. I was born in Canada. Not that I care about, I'm not ownership of any government. I don't comply with their slavery of me, whoever they think they are. But a lot of people who live in the U.S. have IRAs and things like that. But these IRAs are usually quite locked down. You can't really buy many things with them. I don't know. You know much more than me, and maybe you can tell us. But I know that in general, what I hear is you can just buy stocks or bonds, and we're going to see the stock market crash in the next few years. We're going to see the bond market absolutely implode in the next few years. We're going to see fiat currencies implode in the next few years. So most people who have generally most of their money in an IRA are like their what they call the retirement funds, which you should never really retire. You should always be doing something. But this is what they try to sell people: is when you're 65, you go sleep on the beach or something. But anyway,
we'll take care of you. Trust us when you get older, right? Right.
Yeah, and your socialist insecurity will be there. Don't worry about it. That's bankrupt. Everything's bankrupt. All pension funds are bankrupt. And most people hold their IRAs and things that are going to just disappear in the next few years. In the next 5 or 10 years, will absolutely disappear. So it is so smart, if you have funds in your IRA, to get them into a self-directed IRA where you can put them into things that are outside the system. And maybe you can talk a little bit about what I'm talking about here.
Yeah, to your point, there are a couple different accounts that are definitely locked up. So, and if they weren't, we'd be a much bigger firm. And we still are growing and have grown quite a bit the last 5 years. But 401ks, TSPs, 403bs, if a lot of U.S. people who get their retirement accounts sponsored through an employer, what happens is the employer will enter into an agreement with the financial institution and basically lock up that client's capital. So it doesn't matter what company you work for. If you work for the government, you'll have an employee-sponsored retirement account, a 401k, 403b, TSP if you work for whatever. And those are usually, to your point, usually locked up. But what happens is, I mean, this isn't the 1940s or 1950s. People don't stay at the same company usually for 40 years. So what occurs is once you leave your employer, then you have the option to transfer that capital out of that 401k. So a lot of people that come to us don't have 401ks. They start a new IRA, or they're entrepreneurs and they start a SEP or Simple. These are all type of retirement accounts. But when you're with an employer and you're under 59 years old and you're still there, a large portion of the time it's locked up. When you're no longer there or you're over 59, then you have options with that capital. You could transfer into something that you have a lot more control of. To your point, why a lot of them are mainstream is because it's in their best interest. Just like a lot of the crypto IRAs I'm describing now. Like, so they're the fiduciaries, you make fun of them, I make fun of them. A lot of these financial planners, they have to go past their government, whatever, and they want you in this security and that security, and they need to charge you their 100 bips or their 200 bips to stick you in Facebook stock. It doesn't benefit these banks, these fiduciaries, for you to buy gold and stick it under your pillow. It doesn't benefit them for you to buy a Bitcoin and take the private key off. So unless they're constantly turning transactions, unless they're constantly leveraging capital, that's their profit model. That's how they make money. Flipping you in and out of assets, transaction fees, blah, blah, blah. So yeah, if you start to take control of your own thing, minimize the transaction fees, take capital offline, take assets offline, that doesn't benefit the oligarchs. They don't like that at all. That's why you don't see. I mean, how long on Bloomberg and CNBC and Fox were they mocking Bitcoin for? I mean, every week it's a bubble, right? So the same holds true for retirement accounts. They want to put the fear of God in you that, just invest in the S&P, invest in the Dow, invest in the NASDAQ. And by the way, under our program, you could do all that too. Like if you want, you could stay as mainstream as you want. We don't tell you what to invest in, but these guys have an agenda. That's how they get compensated. That's how they get paid. They're not looking out for your best interest. They're looking out for their own livelihood. And people like me and you we're aware of this. I mean, that's why we're in the space we're in. But pulling someone out of that comfort zone is because people in the U.S. and I don't know if it's the same, where you're from in Canada, but in the U.S. usually retirement account after equity in someone's house, a retirement account is their second most valuable asset, like of their net worth. So if you're doing asset minus liabilities, the equity in their home is usually number one, and then number two is the retirement account. So they're very careful with it. They're very, they tread lightly, et cetera, which is great, but that's why they're usually stuck in a lot of these mainstream instruments.
Yeah, and I should point out for people watching this, if you are just watching, you're not totally familiar with the dollar vigilante or necessarily cryptocurrencies, but you're hearing about them and you're excited about them. Maybe you do want to get some cryptocurrencies in your IRA. I should point out that I would not recommend you put all of your assets into cryptocurrencies at this moment in time. This has gone up dramatically in the last year. It's gone up. We recommended Bitcoin at $3 in 2011, so we're up about 500,000% at this point. There's going to be major pullbacks. There's going to be, this space is brand new. There's so many things are going to happen, and that's actually why you should really subscribe to the Dollar Vigilante newsletter, which is where we talk about all this stuff and really give you some really good advice on what to do. And I think our total portfolio holdings in TDV is still just 10% into cryptocurrencies, and then a lot of the rest is into things like precious metals and gold stocks and things like that. So I just wanted to point that out in case anyone had thought out there that I was recommending that you put all of your IRAs into cryptocurrencies. That's not what I would recommend. I think unless you want to take massive risks, if you're totally welcome to do that. That's what the free market's all about. If you want to take major risks, that would be a risky thing to do, especially if you don't know much about the cryptocurrencies, because as I pointed out, there's going to be so much change in this space. There already is. There's actually literally change every day that you can barely keep up with. But to have a portion of your assets in as Gus pointed out, if you actually have a major part of your assets are in these IRAs, to have some of them get some exposure to cryptocurrencies, I think would be absolutely very important to do.
The volatility is such that you've been keeping track of it for forever. I've been keeping track of it forever. But people just dipping their toe in this space, it's not. When people call me out of the blue and they're like, we want to get involved, and this is like the last year. They weren't listening when I was telling them to get involved 5 years ago, but now they're all of a sudden want to put it all in. To your point, my advice is always open up a wallet with $50 in it and just play around, watch it every day, send it back and forth, conduct a bunch of exchanges, dip your toe in the pool before you jump in head first. I couldn't agree with you more. As much as I love the space and we've been involved with it forever, and I'm so pro crypto, the volatility is objectively hostile. So yes, to take your entire nest egg and on this massive bull run, and to each their own. We don't tell you what to invest in. We don't tell clients are free to speculate as much as they want. If you want to hold it all in Federal Reserve notes, go ahead. If you want to put it all in crypto, that's up to you. But at the end of the day, if you're just getting into this space, you really need to go back and look at the volatility that we see in this space, and it's not always on the bull side. There are moments that it's bear, it's hostile, volatile, which is fine, but you should be aware of that. And if you just got involved in the last, me and you, remember how crazy it was back in the first run up when it hit 1,300 and 13 or whatever. I mean, we've seen some crazy things happen the last 5 years, just very volatile, violently volatile, which is fine. And if you could weather that, but some people don't have the stomach for it. Other people, they get nervous. They see something start crashing 30 that they bought at the peak. They see it crashing and they want to liquidate at the first sign of trouble. So it's not for everyone. And to your point, the smart way is just, experiment slowly and get comfortable with it and learn it better. And, as you get more, increase your risk threshold as you get more comfortable in the space. I would never advise someone off the street to come in and go in head first. That's, as much as I love the space, there are many other assets too, and you don't have to put all your eggs in one basket. I think you could invest in many things, so that's the position we take anyway.
Yeah, that's generally what I've been saying for years as well. Whenever anyone asks, like, how do I get into these things, I say the same thing. Open up a wallet, go to blockchain.info, or get on your phone and open up a Mycelium wallet or whatever it is. Somehow get a little bit of Bitcoin. Either buy it on exchange, whether it be Coinbase or if you're in U.S. Kraken. Or
listen, man. They never listen during time. And this holds true for all markets. This holds true for. I've noticed this in the metals market for 7 years. When there's stagnation, they don't care. Like they don't want to hear it. They usually jump in and start. They make fun of you for 4 years about it, and then you see this run up. Then they're like, "I want to. Where do I wire money?" It's like, dude, just just play around with that. It's always I've been given that because for me, you, whoever else, it's second nature now. The whole concept of public address versus private address versus cold storage versus hot storage, like loading exchanges. If you've been doing it for years, I take it for granted that it's just part of our, but someone new to the space, it's like even today, like explaining it to them, it's like explaining the internet in 92 or email in 94 or whatever. It's like, yeah, this phone thing starts ringing in your wall and all of a sudden. So I always point people to some great speakers on YouTube. Like if you do 2 to 3 hours of YouTube videos on it, go watch that Netflix has banking on Bitcoin. Go watch that. Or again, open up a couple wallets with $20-$50 in them and just send it back and forth and get comfortable with it. And but when it's crazy, Jeff, like it has been the last 12 months, people think they want to jump on right away. If when did you start preaching Ethereum? At $5, $10, like
$2.
Yeah, it's like
it was January 2016. I recommended at $2,
and everyone started calling you asking for how to buy Ethereum at $500. So, it just the only thing I don't know, and I don't know if you feel differently about it, is I don't know where we are on the adoption or on the bull run. Do I think? Are we at the early stages? Are we at the middle? Are we going to see a deflationary crash for 3 months or so? I don't know. I don't have a crystal ball. But so those opinions vary. But I think you nailed it 10 minutes ago when you were like, there's always a danger when you see this type of bull swing for this long. Like we've seen so many of them, like big market caps, 10x. I mean, that's insane. So it's proceed, get to know what the hell you're doing before you start playing with serious money. It's, if you're just new to the space, I know it's exciting and you feel like the ship might have already sailed, but we're talking about capital here. I'm not a central banker. I can't print it out of thin air. So I take it very seriously. So just proceed with caution, know what you're doing before you start, thinking that you need to buy at the top. It's risky.
Yeah, but at the same time, I should point out, if you have most of your retirement funds in things like stocks and bonds and Federal Reserve notes, as Gus pointed out, you have the risk of losing everything. So we're at an amazing time right now.
It's an exciting time, man. When you've been preaching this stuff for so long, and I don't know how you feel about it, but a lot of it, like the last 6 months, the last 12 months, metals have been so quiet for such a long time that a lot of us, firm believers in intangible assets, we've gotten beaten up a lot, like in regards to people like, oh yeah, just that the timing's been off, that we've been early or late or whatever. And what's happened in cryptos, I think, as much as you hate to gloat, part of it is like vindication. Like these are exciting times, very exciting. These are game changers that are coming out, and I think it's still early, and I want to believe that. But again, even the mainstream media is like come on board with it, and the government will come on board. Uncle Sam will accept anything that he could tax. They don't care. As long as they get their pound of flesh, they'll adopt it. But again, I don't want to speak for anyone, but I think it's been a lot of vindication and at very, very exciting times with everything that's happened in the last 12 months.
Yeah, and you bring up precious metals. That has been really so forgotten about. I was just talking with our senior analyst, Ed Bugos, just yesterday. How amazing it is that gold and silver have just been completely forgotten in all of this. With the cryptocurrencies taking off, you're seeing like the inflationary aspects of the printing of money from the Federal Reserve and the Euro Central Bank and all that going into the stock markets and increasing the price of stocks. It's increasing the price of real estate. It's increasing the price of everything. And cryptocurrencies are also getting a benefit of that money printing. Absolutely they are. but gold and silver just flatline. It's like they're dead. So, a lot of people out there have their IRAs and stuff. They can't necessarily own bullion, gold or silver bullion in their IRA. By going into an IRA with something like what you offer, you could actually buy some gold and silver bullion, which I would recommend that you definitely buy some of right now, because that has got to be one of the safest, most secure, and with the best upside sort of assets out there right now, in my opinion.
Yeah, it's not the key thing to remember, and I would think you'd agree with this, is you don't have to keep all your eggs in one basket for any asset class. It doesn't matter if it's retirement money or even non-retirement money. Like it's okay to have some, and I don't understand people who are like adamant, like it has to be all this or it has to be all that. It's like, why? Like I'll own some bullion, I'll own some crypto, I'll own some foreign land, I'll own some whatever, Singapore. It doesn't matter. It's diversify, spread the wealth, and I'm a firm believer in you don't want no cataclysmic event should be able to wipe you out. It doesn't matter if it's the bankers, the government, any asset class, whatever. You could invest in multiple things, and under our solution, it's not just crypto. You could invest in metal and crypto, and we've had a lot of people taking crypto profits and buying metal. We've accepted Bitcoin for 5 years now, 4.5 years. So that's another funny thing about the space. A lot of the guys who came in so early, they've pulled out principal and profit, and they're just playing with house money now too. So a lot of people say, and mind you, it's in hindsight, it's a mistake. We've seen a lot of action from Bitcoin 5,000 to Bitcoin 11,000. We saw a lot of people use a lot of those profits to buy metal. So they'll come and they'll say, okay, I mean, it's 10 grand now. The fact that you could buy, 500 ounces of silver or whatever for less than a Bitcoin is insane. So people have recognized a lot of those profits already, which is great. It's okay to swap out, assets here and there. It's fine. It's great that you could utilize Bitcoin for more than just the exchanges. You could still actually buy products and services with it, or other assets. But yeah, it's from the bullion side of our business. Stagnation. It doesn't matter, and I believe the same holds true. Didn't we kind of see Bitcoin everyone kind of hit snooze from Mount Gox or whatever all the way up until this last run 12 months ago? I mean, it was still on all of our radars, but a lot of people just kind of forgot about it. It was floating between 180 and 600 for a couple years, and everyone's like, whatever.
And that was after it hit 1,300
or
over 1,000. And I still remember even a year ago looking at that chart, and a lot of people, if I'd say, you should buy some Bitcoin, they'd look, yeah, but look, it peaked like in 2013 around 1,000. It's like $300, $400, $500 now. It's like, it's dead. It's like, this thing's dead. I'm like, it's not dead. You should definitely buy some.
We were at a show, and you were there too. It was 2013 in Austin, Texas. It was the Bitcoin conference in Austin, Texas. You were there. Tucker was there, Murphy was there. It was a lot of Austrian guys like us, and libertarian guys, and it was a lot of cyber guys too that are kind of like politically neutral, but they were very crypto. Andreas was there. I think Roger was there too. I mean, it was a big show, and it was, I think it was right. I remember correctly. I think it was right before Gox became official. Like everyone kind of suspected it. It had been halted a couple times, and it was right the first time it touched 1,300, and then everything happened after that. But you're right that everyone thought it was over then. Everyone's like, and you saw it just floating between 180 and 700 after that conference. I'll never forget that conference because it was the first before that specific. That was the first like Bitcoin specific conference we went to, and I remember you being there as well. And after, because most of the conferences before that, like your Freedom Fest of the world or whatever, before you guys did an Acapulco, obviously, were more like libertarian minded or hard asset minded, and they would kind of like add Bitcoin as a add-on. But that was a very specific conference where the miners were there. It was all crypto guys, but again, being so much overlap between the libertarians and the crypto guys, but that was the first time we saw that big run up. But it was the snooze alarm after that for 3 years,
Yeah, absolutely. I should point out that those conferences are great to go to. That's where you really get the sense for the energy. You also get a lot of great ideas as you just talk with people and hear what's going on the ground. So obviously we got an Acapulco coming up February 15th to the 18th. On the 18th is a full day called Cryptopoco, which is part of an Acapulco. But if you just want to come for that, you can. It's on February 18th, and we're going to have most of the big names, sort of cryptocurrency sort of people going to be there. And then the day after that is the Dollar Vigilante Summit on February 19th. So really about 5 straight days of just amazing times. And for people out there, as well as Gus was mentioning, if you don't really know much about cryptocurrencies, you obviously want to come to an event like Cryptopoco or the Dollar Vigilante Summit and just meet other people like you. It's quite amazing. And they'll tell you, oh, yeah, a year ago I was like you. I didn't even know what a Bitcoin wallet was. I can help you do this and that sort of thing. And as well, if you sign up for the Dollar Vigilante newsletter at dollarvigilante.com/subscribe, we've got books on there. We've got Bitcoin Basics, a book I wrote a year or two ago. Another book called The Book of Satoshi, which is really the beginning of how Bitcoin began, which I wrote the foreword to, and Phil Champagne, the author, has given it for free to all our subscribers. So you get a bunch of books there, and then you get access to our entire worldwide network of Dollar Vigilante subscribers, which is thousands and thousands of them. And again, they'll try to help you out if you need all this. So, Gus, we should pretty much leave it there. I'm going to be seeing you in about pretty much exactly 2 months from now. Why don't you let people know anything that we didn't mention about the IRAs, anything about perpetual assets? I know you've got your debit card, which is also great. You also do gold and silver storage, which I definitely recommend people, as I pointed out. I think it's a great time to be moving some crypto profits, if you've got a ton of them, into bullion and things like that. And anything else you want to let people know?
Yeah, check us out. You could plug us into a search engine, Perpetual Assets. You could just plug perpetualassets.com into your URL. We focus on retirement accounts. As Jeff said, we also have a metals card that you could have gold and silver, and you get a Visa, MasterCard, and you could spend it anywhere in the world, or ATM, etc. So we've been around like 5 years now. This will be our 4th year at an Acapulco. I'm doing, and I told you already, I'm coming in for a full week this time. 2 days before the show, 2 days after the show. It's hands down, not even close to our favorite show of the year. I say that every time I talk to you, and I'll tell anyone else who asks too. The people are awesome. The show is awesome. And the town itself it rivals the beauty of anywhere else you've ever seen on Earth. Like it's just a beautiful, beautiful place. So I'm very, very excited, and I will bring my sunblock, and then I'll be ready to go.
Yeah, it's great. And with people like yourself and so many others, even David Morgan, one of the top silver analysts in the world, just messaged me the other day. He said the exact same thing as you. He's like, I'm coming for the full week this time. So if you're coming, you have the opportunity. You might run into Gus on the beach. You can pick his mind a little bit on IRAs and people like David Morgan, see where silver is going. So that's the kind of event it is. I'll have the links to all that stuff down below in Acapulco, Cryptopoco, the Dollar Vigilante Summit. Of course, there's Perpetual Assets, which you can get access to at dollarvigilante.com/perpetualassets. And we'll see you down here in a couple of months, Gus. So thank you very much. And that's it for the Dollar Vigilante. If you like this video, please like, subscribe, share, especially with people out there who have IRA. They're just in stocks and bonds and stuff. They literally could get wiped out in the next few years. It's very dangerous. As dangerous as we say cryptocurrencies can be because of how much it's gone up lately, it's just as dangerous just to be solely in things like stocks and bonds and fiat currencies right now. So this is a very important time if you want to help your friends and family sort of survive and prosper. And that's exactly what this Dollar Vigilante is all about, helping you to survive and prosper during and after the dollar collapse.
The most important and profitable investment conference in the world is returning in February 2018. In 2016, the TDV Internationalization and Investment Conference, led by world-famous investor and freedom fighter Jeff Berwick, focused on Bitcoin when it was at $400. It also focused on gold mining stocks, featured by Ed Bugos, which ended up gaining hundreds of % that year. In 2017, the TDV Summit focused heavily on cryptocurrencies. Many speakers pounded the table to buy Bitcoin at $1,000. It has since hit $10,000. And others focused on other cryptos, such as Dash, which was $20 at the time and is currently over $600. If you attended the last 2 years and took advantage of all the information you learned, you would have become wealthy. And on February 19th, the TDV Internationalization and Investment Conference is back. Speakers include Jeff Berwick, who will give out his next cryptocurrency and ICO picks, as well as laying out how to internationalize your lifestyle to become a prior taxpayer using the 5-flag lifestyle and cryptocurrencies. TDV's senior analyst Ed Bugos will lay out his gold mining stock picks for 2018, as well as what he foresees for the markets as a whole. David Morgan, the most respected silver analyst in the world, will give his insights on where silver is headed in 2018. Bix Ware of RoadToRuta.com will expand on cryptocurrencies and precious metal strategies. Other speakers include G. Edward Griffin, Jeffrey Tucker, Roger Ver, Trace Mayer, and more. The TDV Summit is held on February 19th, and we recommend coming to Anarchapulco from February 15th to 17th, and Cryptopulco on February 18th, for 5 straight days of freedom, inspiration, investment ideas, analysis, and recommendations. You can find out more at tdvinvestmentsummit.com.